we are going to go ahead and get started. So on the left, we have the S&P 500. On the right, we have the NASDAQ. And we are looking at the daily time frame. So for the tier 1 people in here, you guys have missed Monday and Tuesday, but in summary, right, we had this as our weekly objective right here. This high on the S&P and this high on the NASDAQ. And price has traded higher, reaching our weekly objective today, being Wednesday, right? So now that price has reached our weekly objective, there's not really much else that has to happen, I'll say. Right? Whenever you're coming into a trading week, just like we did Monday night, right? We outlined our weekly target. We said this is where we want to see price draw towards for the week, right? Who remembers me saying that? That's what we wanted to see. Well, now that it's happened, instead of thinking to yourself, okay, what's going to happen next? What's the next draw on liquidity? Where's the market going to go to next? Instead of thinking like that, the best thing to do is wait for the market to re-stabilize, which I'm going to show you, in the next slide of properly viewing re-stabilization. So, in summary, right, price hit our weekly objective, right? There's no need to think the market has to go anywhere else, right? It could still continue higher and go to all-time highs, or it could reverse from here. But understanding stabilization is now we're going to drop into a 4-hour chart, and we have on the S&P 500 here, Wednesday's high and Wednesday's low. And on the NASDAQ, we have Wednesday's high and Wednesday's low outlined. So how price maneuvers between this high and this low, or how it treats this high and this low, is going to tell us exactly if this is the high of the week or if this is the low of the week. So right now we're within an if-then market. So there's a lot of different scenarios that can, come about here. Scenario number 1 would be if the NASDAQ, traded higher above this high, creating a new bearish Kraken correlation, right? That's scenario number 1, which would support lower prices. Number 2 is if the S&P 500, trades under this low and creates a new bullish Kraken correlation for the week. And then, somewhere later along the line during the day, we get a second stage confirmation and the morning session expands higher. So which would call for higher prices. And then we'd likely see all-time highs being delivered. That's scenario number 2. And scenario number 3 is if the S&P 500 trades lower, taking out this low, but doesn't form a second stage Kraken correlation, and the NASDAQ takes out this low as well. Right, so that is our 3 scenarios that we're working with in right now. We don't need to be correct on a certain area, right? There's not enough information presented in the market right now to make a clear and conscious decision. Majority of the run that we were looking for this week, it's already occurred, right? So there's no need to try to hop back in here and find something to do. So we have to wait for stabilization in the market for it to tip its hand. It's tier 1 find link to join live. Well, they should already be in here. We'll get it figured out though. But does this all make sense? Everything I'm saying? We're on the same track. Perfect. So now we're going to do a little bit of review for intraday, right? The things that we discussed in our tape reading. So here we have the same vertical lines that I told you guys about yesterday, with 9:30 to 10:30 is the most likely time for price to trade intraday in the direction of your higher time frame target, right? And as we can see here today, upon the 9:30 open, price dropped lower, traded higher, created a fair value gap, traded inside of this fair value gap, and then hit our higher time frame target. But before this gap formed, there was another crack in correlation. So you're starting to see, the common theme here is that cracking correlations typically cause the market to do certain things or become one-sided to a particular direction. Right, so the S&P 500 took out this low here, right? Whilst the NASDAQ created a failure swing on this low here, as well as this low. Right, so NASDAQ created failure swings, right, failing to take out these lows, whilst the S&P 500 did take out these lows. And whenever you are intraday trading, in the sense of minor scalps, like moves like this, these are the perfect A+ setups. And those that saw it, you guys know, you saw it happen live. But these are the exact same things that you want to frame and just find repeatable over and over and over and over again. So step number 1, identify the narrative. Step number 2, find a way to get alongside the run between 9:30 and 10:30 on lower time frame chart, right? It's that simple. Trading doesn't have to be, any more complicated than what people make it out to be. It can be just something as simple as this. Well, something that looks simple on paper. But we'll go deeper into it later on why things like this actually work and how you'll be able to spot the high probability setups yourself. So, we all on the same track. Perfect. So that was pretty much all for today's overview / review. Now we can do some Q&A and then go ahead and wrap this one up. Why did the S&P 500 turn more bearish than NASDAQ around 9:30? Typically, the S&P 500 is always the middle asset, meaning it's not stronger or weaker compared to the NASDAQ or the Dow. All right, so right at 9:30, if you take a look at the Dow, you'll see that the Dow had a big switch in volatility, and the Dow delivered lower. While simultaneously that happened, the NASDAQ became stronger. And irregardless of the NASDAQ being stronger or weaker, or the Dow being stronger or weaker, typically the S&P 500 is always the middle asset. Now, although it's the middle asset, why has our focus been on the S&P 500 this week? Because of the higher time frame. Exactly. We're going to have access to this year's videos after we save for the whole year, yes. If you save for the entire year, you get lifetime access to the content you paid for. Can Tuesday be treated like Monday and use the 4-hour gap again? I've already talked about this yesterday, but whenever you have, usually there's only one 4-hour gap within a week. That is really solid. If another one forms, it tends to get a bit iffy. Now, there are times where, and there have been times where price formed, 2 4-hour gaps back to back on separate days and it worked flawlessly. But there are times like this week where it just, lingers around, creates a little bit of a move, and then comes right back into it. You look at the 1-minute chart only when the draw's target is pretty close to the price of the asset you trade, or can you also apply that? You can apply this no matter how far the draw is. as long as the narrative and a crack are aligned. Exactly. Doesn't matter how far the draw is, right? 9:30 to 10:30 is that time window whenever price is most likely to create a good run in the direction of your narrative, right? Does that mean it'll 100% reach the narrative? No. It means that it's going to create a nice run getting towards it. And that's your bread and butter right there. That's where you'll thrive. Is it possible to anticipate that the Nasdaq would create a failure swing on the 1-minute chart? Was expecting the S&P 500 to do that since it was a stronger asset to the upside according to higher time frame analysis. So I'll go ahead and say this right now. Whenever you're viewing the lower time frame, in terms of anticipating cracking correlations, you'll often notice that it doesn't matter what the higher time frame strength and weakness is compared to the lower time frame, right? Say for example, the Nasdaq weaker on higher time frame. Just because the Nasdaq is weaker on a daily chart or a 4-hour chart doesn't necessarily mean that will reflect onto a 1-minute chart, right? So you have to look at higher time frame and lower time frame strength and weakness. Not sure if it is just for me, but your screen is not clearly visible. We see two windows, one with your voice, one displaying the screen. Could you please may just keep the screen with the charts active? Are you talking about on Discord? Click on the window that shows the chart, and then it should make it go full screen. Let me know if that fixed it. One of the things that makes higher time frame liquidity pool important was old swing left in time. Can you elaborate more on that? I get the extreme high or low part. So this draw here, let me read the question one more time. So what do I mean by like an old swing left in time? So there's different, I'll say, levels of liquidity that you focus on. And this might sound confusing, but we're gonna go deeper on into this, right? Keep in mind, this is week 1. This is the first week out of 52. But liquidity pools, right? You already understand the extreme low and the extreme high part, right? It's extreme low, extreme high. But what I mean by liquidity pools, outside in time. So this high was created Friday in December, December 26th, right? Where are we currently at? What's today's date in the trading world for Eastern Standard Time? It's January 8th, right? So December 26th, that's the high that we outlined. Today's January 8th. Was this high a previous day's high? Yes or no? Was this high the previous week's high? No. I'll say the previous week's high. No, exactly. Now, keep in mind about what I said on the recent live stream. You look at the previous week, or 2. So the previous week, or 2, that's going to be, out in time, especially or 2. right? This high is significant in the sense of we're using it as a draw. We're not using it in the sense of, if a signature forms, after price tags, then we'll look for this, et cetera, et cetera, et cetera. We're using it solely as a target. That's it. And then once price gets to that price point, then we wait for stabilization, figure out what to do next. Does that make sense? How do you pick the right asset? The one that makes the failure swing? Is there some kind of technique, or is it based on time spent on chart? Where you would see the stronger asset based on experience? Yes, things like that are going to be experience based. So anything beyond 2 weeks we disregard. Disregard in the sense of using it as a technical, I'll say. Right? We're not taking this high right here and saying, okay, if price creates a cracking correlation on this high, then we'll look for price to reverse, right? We never think about it in that sense. Same thing for this high right here, right? This is a high way out in time. We're not looking at this high in the sense of price reversing off of it, right? It's a target. That's all it is. So yes, anything beyond 2 weeks, you should only view it as a target. But within the current week, that's where you want to work with it. Is that what tomorrow's news unemployment claims is for? To show the next direction? Yes. Now, tomorrow is the Thursday before non-farm payroll, right? So don't expect the highest probability price action. But if you're somebody and if you're a newer person, right, it's 100% fine if you didn't, catch this or catch any move of this, get any portion of it. That's 100% completely fine, right? The biggest takeaway is that you saw it called to you, and you understand why it happened. So next time it rolls around, you'll understand how to get alongside ship. But if you're somebody that is an older student and you're able to, catch this move here, and you got your 1 to 2, 1 to 3 risk to reward, whether it be intraday right here, whether it be the higher time frame right here, that's it. There's no need to do anything else for the rest of the week. So higher time frame SMT with like 3-week old low and current week candle, for example, is irrelevant? Yes, precisely. Does anyone in your family or your girlfriend know that you trade? Yes, they do. But I keep it very, very only immediate people and people that are very, very close. Oh, do they trade? No. I'm not. It's a week one, by the way. It's a week one. Thought we left that in 2025. No, they don't. But my girlfriend, she'll joke with me about, how about we switch jobs? She'll she'll say things like that to me. It's pretty funny. Good starting base, knowing how to gauge our narrative withdrawal and liquidity, and which highs and lows also helps filter sequential SMTs or SMTs. Yes, exactly. Can you do a quick recap on how you'd catch today's move? Intraday, yes, we already did. Right. 9:30, cracking correlation, fair value gap. Right, simple as that. Going towards the draw on liquidity that we outlined on Monday. with the info of current week, that's when we'll have a when this reaches here, we'll do this. But with higher time frame liquidity points, we use as draws, magnets, and or as a way to gauge buys. Yes, exactly. Yep, already catching on. How do you know that the setup would form on the 1 minute today and not sit and wait for the 5 or the 15? Time. Time of day of week. All right, today's Wednesday. There are red news folders, right? We knew today would likely be a volatile day. And although it looks relatively consolidative, right, did it offer a setup that was clean in the direction we wanted to see it happen? Yes. So if we have a bullish Kraken correlation tomorrow or so, then December high is the draw for NASDAQ. Likely to be the case. But come by the close of this week, we'll know for sure whether or not, we want to come out and clear out these highs. Right, once non-farm payroll is said and done, we'll know for sure. But until then, right, remember we got to wait for stabilization. Is there a scenario where we focus on what happened outside of our current week, previous Kraken correlation, higher time frame key levels? Very rarely. Very, very rarely. Stabilization is just waiting for the market to show something of substance so you can, get on side with it again. So it needs to stabilize. When determining the target for the week, do you think about the different assets in the triad catching up to one another at relevant swings? For instance, if one asset fails to manipulate a level, do you expect the other to reach the same level? It's very funny you ask that question. And a follow-up question to you is, have you seen anything I put out before? And it's today's live tape reading. It's already uploaded. Okay, that's why. That's why. Yeah. Well, I'll go ahead and spill the beans here, but asset synchronization was founded here. You're learning from the source now. If I were to show the new guys here what core content looked like, and you went on your Twitter feed right now, you'd see that things that I talked about last year during February, March, April are, that's all you'll see on social media now. But yes, to answer your question, yes. And by no means is that, disrespect or hate towards anybody, right? He came in here, it's his information, he did what he wanted to do with it. Right, that's his business. Do you plan to cover what makes a key level and how to identify the same as part of the course? Everyone always talks about key levels, very few actually elaborate. Yes, we will talk about that. But if you want the short answer right now, a key level is just a PD array. That's it. More specifically, a gap. But in here, you're going to learn, which gaps actually work. Because just because you see a fair value gap doesn't mean it's 100% of the time of use. There's a lot that goes on behind the scenes in choosing high probability gaps. Referring back to stabilization, how do you know right now it's not being bearish, reversing, or I mean, it very well could be, right? And that was one of the scenarios. If the S&P 500, well, more importantly, we'll say it like this: if the S&P 500 takes out this low here, and the Nasdaq also takes out this low here, then what does that mean? What does that tell us? What's the feedback? Is price still likely to deliver bullish? No, exactly. So that scenario is a part of stabilization, right? Right now we just have to wait for the market to tip its hand again because it could go either way, considering the time of week, right? Tomorrow is a low probability day, and then the day after that's non-farm payroll. So this week right now is at the highest level of uncertainty, and you don't want to be playing guessing games. Can we trade using the 1 hour time frame as the daily and the 15-minute the same way we treat the weekly range? You could. Everything is fractal, right? But the lower the time frame you go, the less probable things become. Just keep that in mind. What kind of higher time frame gap do you not trust for continuations? We'll talk about it. Talk about it later on. Use open high, low close, open low, high close approach for this week. Open high, low close is, I mean, it's not really that big of a deal. The only time you should use open high, low close is whenever Monday consolidates in terms of the weekly range. Right? If Monday doesn't consolidate, open high, low close doesn't mean anything. How do you know if it's not just seeking sell side to go higher or more? Wherever it can happen, just when your price unfold, and we'll read it as it goes. So keep in mind what did I say about scenario 2? Who remembers what I said about scenario 2? Let's see. If the S&P 500 takes out this low, how do we know that the Kraken correlation will be high probability? If what forms? A second stage, exactly. If the second stage doesn't come about, think exactly what I said Monday, right? About that Kraken correlation that we saw here. Right, what did I say about this? We expect it to fail. If there's not a second stage, we expect it to fail. We'll view that exact same logic, but right here. Right, the S&P 500 can take out this low, and the Nasdaq can be resting slightly above it. Right, that's fine. But if a second stage doesn't come about, then we don't expect it to hold. Right. Drop some sauce on the daily cycle. London session and New York session are the highest probability sessions to form higher low of the day. Second stage would be another SMT or TPD, exactly. The answer you gave for open, high, low, close is the same answer for power of 3. Yes, it is. Power of 3, open, high, low, close, it's all the same thing. Yeah, accumulation, manipulation, distribution, all the same thing. But I think we are going to go ahead and wrap this one up. So, with that being said, hopefully you all found this one insightful. I'll read this last question and we'll head out. The past 4 years until now, have you noticed a change in price delivery? Has it become more difficult? If anything, it's become easier. If anything, more volatility is in the market. Whenever I first started trading, the S&P hit a low of like 3,800. And the Nasdaq was sitting at around 10,000, 11,000, 12,000, around that area. Now we have the S&P at 7,000, the Nasdaq at 20. The Nasdaq now compared to where it was 4 years ago is the same price, to where the Dow was. So if anything, there's more volatility, which means bigger opportunity. If anything, it's gotten better. But anyways, we will go ahead and conclude this one. So for anybody that has any more questions, right, the questions forum should be open for you guys. Right, let me know if you guys can see the questions forum. It's going to be under the questionnaire tab. Can't see it. If you can't see it, you'll probably have to go to browse channels at the top and then activate it. That's how we'll be able to see it. But any other questions you guys may have, I know some of you, where you live, it's middle of the night for you, and you might not be able to attend streams or attend tape readings. So if you ever have a question in the future and you're busy, you can't attend anything, that's for 2026 questions right there. But yes, so with that being said, hopefully you all found this one insightful. I'll speak with you all again Friday morning. Well, for tier 3, I'll speak with you all again Friday morning. For tier 2, it'll be Friday afternoon. But good luck and enjoy the rest of your day.